Okay, it's just 11 o'clock. I see everyone's Outlook calendar reminder must have clicked in and got everyone joined at once. So welcome everyone. It's I think it's a sunny day out there, so that's a good thing. My name is Maria Gambacorta, and I'm going to be the host for the webinar today, Tax Benefits of Making the New York State PTET Election. Before I go through introductions, I'm going to go through a few housekeeping items, so bear with me, I'll keep it short. Today's session will be recorded, and we will share the recording either end of this week or early next week with everyone, so you'll get an email letting you know that the recording is available. And as I previously mentioned, we do have several resources on our website, and those were shared via the confirmation email this morning, so you can click through on those. We are offering CPE for this session. The live session earns you 1 hour of CPE credit, but not the recorded session. So a CPE certificate will be emailed to you from Prolera, and that will come in about 30 days. So you can anticipate that shortly. Chat and Q&A are both enabled. So if you have any questions for me, you can put them in the chat, or just general comments and questions. If you would put them in the actual Q&A section, we will answer questions throughout. So if you do have a question, give us a minute. We'll pause the presentation and address that question. I mentioned CPE, so I think we are all set to get to introduction. Today we're joined by Missy Needham, who's a partner in our tax department. She has extensive experience with pass-through taxation of partnerships and S corporations and individual taxation, and she specializes in areas of real estate, energy, and professional services, and of course individuals. And Amanda Ornowski is a principal also in our tax department, and her expertise includes business and international tax consulting, including pass-through entities, along with compliance for high net worth individuals. So I'm going to turn the program over to Missy and Amanda.
Thanks, Maria. I appreciate it. And thanks behind the scenes, Christine and Maria, for putting this together and making the push for us to get this out to our client base. This is a really important topic that we experienced at the tail end of 21 and now working through 2022. So today, joined with Amanda, we're going to bring you through the benefits of making this New York State PTET election. Today's agenda is the pass-through entity tax, which is PTET. We're generally just going to refer to this as PTET throughout the presentation, but really this is the entity tax, and we're going to go through the calculations, what it means to the pass-through entity and the owners. We're going to talk about the 2021 elections that were made and due October 15th of 2021. The resulting PTET return that's going to need to be filed by March 15th of 2022 or extended by that due date. And then also the 2022 elections and estimated tax payments, noting that the 2022 PTET for New York State is definitely going to be different than how the 2021 PTET program was administered. So to just give you an overview regarding eligibility. So PTET is an elective tax. It's applicable to pass-through entities, which are PTEs. So you'll see that throughout the slide if you're an acronym person. And essentially these PTETs and PTEs, it's a workaround to the federal SALT cap of $10,000 for state and local income taxes. It has nothing to do with your personal real estate taxes. This is just income taxes for individuals. So why this headache? Why do we need this workaround? Why are we now going through this pain of trying to make these deductions at the pass-through entity level? To give you a little bit of history, since we all have brain fog from the pandemic, the tax reform under the Trump administration limited an individual's ability to be able to deduct their state and local income taxes as a Schedule A itemized deduction. So now you're capped at $10,000. Because of that, they also doubled the standard deduction to try to make up for it. But New York State being a high tax state, this really does hurt a lot of taxpayers. It's been on the forefront of discussions and holding up a lot of current tax legislation. So many states have decided to come up with these workarounds, these PTET workarounds, which have been approved by the IRS as long as it's administered properly and there's no abuse, making sure that you're only taking the deductions that are allowed. Now, the PTET is not mandatory. However, once an election is made, it is irrevocable for that tax year. This election is an annual election, so you can make it for any tax year or not make it for any tax year. And for 21, this was due October 15th. For 22, this is due March 15th of 2022. And we'll get into those due dates as well. Making the election is fairly easy, but it's not something that your tax professional can do for you. We can help provide you guidance on how to do that and instructions on how to log into your account to do it. But that is up to the actual pass-through entity to make that election. So specifically, there's an IRS notice out there, the 2020-75, that really explains why this is allowed and how to take the federal deduction on this flow-through income. This does not save you any New York state taxes. This is really just to be able to get a federal deduction for paying your state income taxes at the entity level. So now I'm going to hand it over to Amanda, and she's going to talk about how this all works.
Yeah, so I wanted to cover with an illustration here how the PTET can provide a benefit for taxpayers. As Michie mentioned, it's not going to save any New York state tax, but it will save you federal tax. So maybe listening in, you are, if not, imagine you're a partner in a partnership. Traditionally, you would be paying tax on income generated by that partnership when you file your New York state tax return. When your partnership makes the PTET election, the partnership takes responsibility for paying New York state tax on behalf of the partners, and then is allowed a deduction on the tax paid and issues a credit to each of the partners. So this example is very high level. We're looking at a business that has $100,000 of New York state income. The partnership's going to pay $6,850 of PTE tax. Without the PTE election, the individual will be paying $13,497 of individual tax. With the PTE election, your business income is going to be reduced to $93,150, and you'll only be paying federal tax liability of $11,990, which results in a federal tax savings of $1,507. So we're looking at this example. I'm looking at it in what I would think of as a PTET vacuum. The actual benefits are going to vary depending on other factors that are present on an individual's tax return. So QBI, self-employment taxes, your overall tax bracket, things like this will impact the total benefit. We would expect even equal owners on the same flow through will have a slightly different benefit depending on each individual's tax return. And hand it over to Maria to do our first polling question.
Okay, everyone, as a reminder that if you want CPE for this session, you need to answer at least 3 of the 4 polling questions. We will have 4 polling questions. So again, you need to answer all 3 to qualify for CPE credit. So today, as many of you know, it's Dr. Seuss's birthday. And so here's a trivia question. Which of the books written by Dr. Seuss has only 50 different words? Give everyone a minute to answer that. I see that answers are still coming in. So, and a few more seconds here. I want to give everyone the opportunity because I know CPE is important. Okay, it's been about a minute here, so I'm going to end the poll. And the answer, actually, the majority of you not get it correct. The answer is actually green eggs and ham. Dr. Seuss was challenged by one of his friends. He said, hey, can you write a book with only 50 words? And sure enough, he did. And Green Eggs and Ham is actually one of the best-selling books as well. So turn it back over to you ladies.
Thanks, Maria. So moving on, we wanted to talk a little bit about non-resident owners, because one question that we do receive often is, what if I have non-resident owners in my flow through? The short answer is that's okay. That doesn't disqualify you from making the election, and you may still realize a benefit. In this example, we're looking at a partnership with $100,000 of taxable income, and 50% of that is allocated from New York sources. You can see we have two equal partners, one from New York and one from Pennsylvania. Our New York partner is allowed to take PTET on their share of all partnership income, so $100,000. Our Pennsylvania partner is limited to only taking PTET on the New York apportioned taxable income, so $50,000. This gives us a combined PTE tax base of $75,000 to calculate the PTE tax. So what does this mean for everyone? For us, when we're completing a return, we'll need to allocate the PTET benefit to the partner who's going to receive the New York State credit. For you, it means we'll be asking you to review the partnership's operating agreement to confirm that these sorts of special allocations of income are allowed. If the operating agreement doesn't currently allow for that, it is something that we'll need to take a closer look at and make sure all partners are in agreement with this treatment. So what does this look like if you're an S Corp, not a partnership? Later in a presentation, we'll be taking a closer look at how to calculate your New York PTE tax base. But for now, just look at how the benefit is going to come through for an S Corp with non-residents. Similar scenario where the business has $100,000 of income and 50% of the activities are from New York sources. When we're working with an S Corp, the entire New York PTE tax base will be limited to your New York apportioned taxable income. So this results in both partners receiving the same benefit from PTET. So in this case, as often is, S Corp ownership is a little more straightforward than partnership for us. Something else to consider is activity in states outside of New York. A part of the law that was passed by New York is allowing a resident state tax credit for PTE paid to other states. So we have a map as of about 2 weeks ago that shows that there are currently 22 states that have launched a version of PTE similar to New York, and 5 more are looking at proposed bills now. If you're a member of a flow through, we'll need to keep an eye out for any PTE paid to other states that can be taken as a credit on your New York return. And likewise, if your business operates in one of these blue states highlighted here, we'll need to take a look to see if it makes sense to opt into that state's PTE regime as well.
So Amanda, is the resident credit in New York State, is that so that there's not double taxation on the same income, since New York pulls in all a resident's income, even if it's earned out in a different state?
That is correct.
Got it.
Yes.
And with all these states that are I see here that have these similar PTET programs, do they all work in the same fashion as New York State, or do they all have different nuances that we're going to have to keep track of?
They do all have different nuances that we need to keep track of. They're all going to have different rules for how to opt in, if it's going to be a separate filing similar to how New York is, or if it's combined in their current state tax returns. So we will need to look at each state individually to see what the compliance looks like and if it makes sense to go forward with doing PTE in that state.
And then there's even some states that don't have resident credits, where you, a shareholder or member could be in a bind where if they're a resident of one state, they could end up paying tax to 2 states.
Potentially, yes.
Oh, okay. So let's just touch a little bit on eligibility and if you think that you would be eligible. So PTET is applicable to New York State partnerships and corporations, including partnerships, which would be LPs, GPs, LLCs, New York State S corporations, LLCs that are taxed as partnerships or S corporations for federal and New York State tax purposes. So if you've got a little bit of a hybrid structure out there where for federal purposes, you may be a C Corp, and New York State purposes, you're an S Corp, or flip-flops, either way, you need to be consistent in the type of entity you are to be able to take the PTET for New York State. This is really because the benefit for this is to be for individuals or trusts that are subject to Article 22 tax for New York State purposes. Entities that are not eligible would be corporations that are not S corporations, C corporations, nonprofit corporations, single member LLCs. A lot of single member LLCs would be reported on an individual's 1040, either as a Schedule C or a Schedule E. Sole proprietorships and certain types of trusts would not be eligible. And more due dates to track, as if your normal compliance wasn't enough. Now we have some new due dates that need to be tracked at the entity level. Generally, individuals pay their estimated tax payments throughout the year, and the entity doesn't normally have to worry about that. For 21, we had elections that were due October 15th of 21. You may or may not have elected into the 2021 PTET program, because essentially you almost had to double pay in your estimated tax payments the way that New York State structured this. Some people opted in, some opted out, and we're working through those calculations now and also the annual reports. For the 2021 estimates, if you were a cash basis taxpayer, to be able to take that deduction for 21, you would have had to make the New York State estimated tax payment by December 31st of 21. If you were lucky enough to be on the New York State email listserv, they kindly emailed everybody, I believe it was December 30th at about 4 p.m. saying that the 31st was your last day to make an estimated tax payment. Accrual basis, you're not required to have it paid in by December 31st of 2021. It would be calculated and reported on the annual report, which is due March 15th, but there is also an extension because a lot of calculations need to get done. Your tax return also has to be done to be able to determine the exact amount of the PTET that you would owe to New York State. So there are extensions available to September 15th of 2022. Sometimes it's much easier to let this coincide with how your tax return works, just to make sure that we're not overpaying. We can amend these returns, so we want to make sure that we're careful and we get everything right. So if we ask you to extend it, don't be nervous. It's really, we just want to make sure we're doing our due diligence to get all of this information collected, especially because it's all of the shareholders and members' information on your eligible entities. For 2022, so as we're working through the 2021, trying to get the annual report done by the exact same time that you need to make your 2022 election through your business account. That is due March 15th of 2022. If you are looking to make the election for 22, if you made it for 21, it's the exact same thing. I think at most it's 5 clicks, Amanda, if that. We have some great instructions on our Lumsden CPA website that kind of clicks you through if you forgot how to do it. The first quarter estimated tax payment for 2022 is also due March 15th. And then you would pay in quarterlies throughout the year in June, September, and December. There is a safe harbor method, which is 90% of the current year or 100% of the prior year. And it's 100% of the prior year, Amanda. That's if you made the 2021 election, correct? Okay. And you pay it in quarterly. So if the entity is making these estimated tax payments quarterly on behalf of their pass-through owners in 2022, those individual owners would not have to make estimated tax payments on that part of their income for their tax return. Now, they may have other estimates that may need to be paid, but the liability for the entity, the pass-through entity that makes this election would be paid at the entity level. And then the 2022 return would be due March 15th of 2023, again, with that additional extension if needed so that we can get all the calculations right. The election is based on a calendar year. So for fiscal year filers, you must elect, file, and pay the PTE for calendar year in which its fiscal year ends. Calendar math is difficult. So we can help you make sure that you get all of these, elections done in time, especially if your fiscal year ends, so you don't miss out on this benefit.
Thanks, Michelle. I think we are going to do a quick polling question again, and then I'll get in and talk a little bit about how to actually calculate your New York PTE tax base and tax due.
Yes, everyone. So I don't know about you guys, but I am definitely eager for spring here. It's been a cold winter. So spring ushers in on March 20th. What day does it end? So it's later than I would have thought. So far, the majority of you are getting it right. So we'll just hang on another 10 seconds. We're almost at 100% participation. Okay, I'm going to end the poll and I'll share the results. And the correct answer is Tuesday, June 21st. So the vast majority of you did get that right. So we will move on from there. So thanks, everyone.
Thank you. Before we move on, we did actually get a question in the chat asking, what is the risk or penalty for underestimating income when making 2021 estimated payments for a cash basis entity that made payments prior to 12/31/21?
Amanda, you want to tackle that one?
Let me break it down here. So for 2021, there is no risk for over or underestimating estimated payments because there was really not a lot of good information out there for how this needed to be calculated or paid. For 2022, there is interest and penalties if you do underpay. All of the refunds, if you did overpay, will be returned back to the partnership after the returns are filed. We have not yet seen from New York what the turnaround time is going to be on paying those, but hopefully we'll be getting these back very quickly. Michelle, anything to add on that?
No, hopefully that answers the question.
Okay.
If not, just throw another Q&A in there.
Yeah, you can follow up on that if we need to. So then to calculate our New York State PTET income, when we calculate your PTET income, we'll be including all income deductions, gains, losses. Like Michelle mentioned, we need to have your tax return done before we can go in and compute what your PTET tax and credit is going to be. And when we were looking at allocating income to non-residents, the PTET base will vary depending on if you're filing as a partnership or an S corporation. So in a partnership, our PTET base is going to be the sum of all income attributed to resident partners and New York source income attributed to non-resident partners. In an S corporation, our PTET base is limited to New York sourced income for all partners. We do have an illustration of this with some numbers on the next slide. And again, if there are any questions, feel free to reach out as we're walking through some of these calculations, trying to make it a little easier to understand.
Amanda, I'm going to interrupt real quick. We do have a question in the chat. It says, can you apply 2021 overpayments? Can you apply 2021 overpayments to 2022?
No, you are not allowed to apply a 2021 overpayment into 2022. So that March 15th date for the first quarter estimate will be important because you do still need to make that estimate, even if you did have an overpayment with the state for 2021. Unfortunately, they aren't letting us apply those. So looking at this calculation to calculate the New York PTE tax base, we're starting with a federal taxable income of $103,000. And initially, when we compute this, we're going to look at the tax base without any estimates made towards PTE. So if you were a cash basis taxpayer that did, maybe you already paid in $10,000, expecting that was going to be your tax due, we are not going to look at that initially for this calculation. And then because this is a New York State tax, we need to include any state modifications that we would normally report to you on your New York K1s. So on here, it's just a basic depreciation adjustment. And then that's going to bring us down to New York taxable income of $100,000. Then you can see on here again, we're going to keep using 50% New York source on here to get us to $50,000 of New York apportioned taxable income. So on here, a New York State resident partner is going to base their PTE tax on $100,000. A New York State non-resident or a S corporation shareholder is going to base their PTE on $50,000. So without getting too technical, we're going to step a little further into how the federal deduction is calculated as well as the state credit. If you are a cash basis taxpayer, your federal deduction will be whatever was paid prior to year end, and we only need to calculate the credit based on final taxable income. If you're an accrual basis taxpayer, there are a few extra steps that we need to take a look at on the next slide. So accrual basis taxpayers, we get to walk through that entire calculation that we just looked at twice. So our first pass through is illustrated on the left here. We're going to start with taxable income, excluding any PTE payments that were already made. For this year, in many cases, accrual basis taxpayers opted to not pay anything prior to year end, but if they did, we would need to add those payments back in here. So we're going to start with $100,000 of taxable income, which fits us down, if you kind of follow through, to a PTE tax base of $83,125. The total PTE tax on this is $5,694. Assuming no estimates were paid, the $5,694 is going to be recorded as an accrued tax expense on the books. If estimates were paid in, we'll maximize between the actual tax due and the payments that were made already. So then recording that entry is going to bring us to an adjusted taxable income of $94,306. So if you hop over to the right-hand side of the screen, you'll see our new federal taxable income is the $94,306, which is our starting point to calculate the state credit. So if you haven't guessed already, this calculation is a little circular. When we go through the calculation a second time, we're going to come down to a New York PTE base of $78,143, and the PTE tax due to New York is only $5,352. So the amount paid to New York State on the bottom line here is $342 less than what was accrued for federal purposes over on the left-hand side. So after that tax is paid, the $342 is going to remain in accrued taxes on your balance sheet. This is something that we do commonly see with C corporations, and at the end of the year, we'll review what was recorded versus what was put up in accrued taxes and true up that difference for you when we're doing next year's tax return.
So this is kind of a new concept for pass-through entities, a tax
Correct.
accrual, right,
Yes.
Amanda? Because normally it's we pay our LLC fee if we have one and we're done with it. But now we have to kind of bring in this accrual of these taxes, which most of our pass-through entities aren't used to seeing.
Correct.
Got
Yes.
it. Okay.
Yes, but we are used to seeing it, and we're here to help you figure that out on your taxes going forward, now that we are going to have this little bit of a difference sitting up on the balance sheet. I think Maria's ready with another polling question for us.
Yes, so this is 2022 is a big year for Lumsden and McCormick. We are celebrating a milestone anniversary. So is it 50 years, 60 years, 70 years, or 80 years? So give everyone a minute to answer. We're almost there. We'll give it about another 10 seconds, everyone. All right, I will end the poll and share the results. So it's 70 years. Lumsden and McCormick was incorporated on May 8th, 1952. So that is just about 2 months away for us. So congratulations to us, 70 years. Thanks, everyone.
Thanks, Maria. We're going to get into talking about the 2020 returns and extensions. So New York State is requiring all of this to be done through the New York State Online Services account. This is not something that we can do when we electronically file your tax returns through our software. So there's an an extra step outside of our software that we have to do this. One thing to make note of, if you haven't set up your New York State Online Services account yet and you're looking to do this for 2022, there are instructions. New York State's website is actually very good. I would also say that their customer service has been very good in terms of setting these accounts up. The chat features, the hotline numbers. One of the big things when you're setting the account up is noting that you want full access to the business account and not just for taxes, to pay taxes and respond to notices. So there's two options when you go to set it up. If you pick the wrong option and you just want to say that you're paying taxes and notices, you're not going to be able to find that tab to be able to make your PTET elections or payments, and you're going to have to recreate the account all over again, which is not fun, but can be avoided. So as your tax professionals, we are able to log in and file the returns and extensions on behalf of our clients, but we can only do that if you have signed what we call this Easy Rep form. It's kind of a short form power of attorney, so to speak, that gives us the ability to go into the account for you, file the return or file for the extension online. We will not do any of this work if we do not have these Easy Rep forms signed and returned back to us, because we'll get in trouble. So you will see these, we will send these forms out to you. You can sign them and send them back and request that we do these for you. If not, if you're taking it on, great. There's great resources out there to help you, guide through the process of filing the returns. But it is new. We haven't sent these out before. So if you see it, please don't ignore that email saying that we need it. It's one quick signature and it's good for infinity and beyond.
Infinity and beyond.
Infinity and beyond.
And one thing I actually will note on top of that is for us to be able to view your taxpayer account as tax professionals after you return that Easy Rep form to us, we need to verify a few different items of income if you are a partnership. So someone from our firm may be reaching out to you again to request copies of withholding tax returns from your payroll company, sales tax returns if we don't complete them on your behalf. So look out for that, or feel free to reach out to your Lumsden contact and ask if we need some of that information, because we will be feverishly setting up some of these accounts for people as we're approaching the deadline here.
Good point. Thanks, Amanda. So refunds. So we kind of covered this a little bit in the chat. So these are going to be automatically refunded to the company, the entity, the pass-through entity that is filing the return. So if you did overpay, so once we've done the calculations, if you did overpay, that refund is going to go directly to the entity. We don't know if it's going check or ACH.
We have not seen that.
Yeah, that's great.
From New York State.
So eventually it'll get to the companies. New York State has been very slow on guidance. And there's really, when we called it, we're saying we're filing an annual return, there's really not a form. Like you would normally see a tax form, a return for us to be able to look at. But they are not allowed to be applied to the next years of tax. And you can't push it out to your owners. So if you paid in $50,000 and only $40,000 is what's due, that additional $10,000 can't be passed through to the owners for them to take it on their tax return. That $10,000 will be back to the company at some point. Fortunately, we don't know all of the mechanics of that yet. New York State has not given us a whole lot of guidance on how that's going to work. Balances due. These are going to be due with the filing of the return. So we will be reaching out to confirm the balance due, the banking information to be able to initiate the withdrawal. All of this has to be done online. New York State does require that it is an ACH transfer for these payments. New York State wants their money. So they want all taxpayers to make sure that their banks will allow transactions from the New York State. We have it here, the New York State DTF PTET, and that you are allowed to have these ACH debits from your bank account. There's I think they call it a debit blocker. Some accounts have debit blockers on them. Because if your payment is blocked, so if you have your payment set up to come out on March 15th and you didn't file an extension for your annual return, and you have a debit blocker on your account, when New York State goes to draw the money out and they can't get it because the bank has it blocked, what happens, Amanda?
You're going to end up with some interest and penalties
Okay.
once you can finally make that payment. If you had set up the payment to go on March 15th and it's determined that it's late, I would encourage that we try to get these done before the 15th so we can identify that issue ahead of time.
Yep.
Yep.
So it's worth a quick call to your bank to make sure that that'll all go nice and smoothly and one less thing you have to worry about.
Right. And like Michelle had mentioned, there is not actually a tax return that we'll be able to provide you after these are completed. We need to report to New York State who the shareholders of the entity are, their identifying information, social security numbers, and things like that, what their ownership percentage in the entity is, and then how much of the credit is going to be allocated to their account. This is going to allow New York State to then match that PTE credit to the owner's tax return when they're filing it. So after we're done filing, we'll just get a nice little confirmation saying your PTE return was filed, and we'll send a copy of that to you for your records as well.
Great. So that's the behind the scenes at the entity level. What are our pass-through owners going to see, Amanda?
Yeah. So when you're taking a look at your federal and state tax returns, you're going to see that your federal income is reduced for any PTE payments that were made or accrued. On the New York returns, the partnership K1s contain additional detail to report the PTET credit that is going to be allocated to each member. So kind of a little extract from that K1 is on here. In one of the previous examples we were looking at, owner had a PTET credit of $3,854. So this is going to come through on the K1 and be identified with code 653. S corporation K1s haven't been updated yet to assign a specific line to report this credit. Presumably with how late all of the guidance came out, they have not had a chance to update their forms. So what our software is doing is it's reporting your PTET credit kind of just at the bottom of the page. It's kind of jammed in there with a page number, but we can see it. We know how much credit is available for that owner when we're doing their individual tax return as well. You see, and hopefully for 2022, that will change and the forms will be updated so that it is clearly on the form. But this year we will be on the lookout for those if you had any flow throughs aside from ones that we were prepared internally for you.
And if you're working with your pass-through, if you're a controller or CFO and you're working with your pass-through owners, you know, it's good to kind of point it out to them, because I think the New York State K1 is probably 5-6 pages long right now. So yeah. It's really hard to, it's
buried.
It is. It's hard to really get it because it's on page something 4. Right. So you don't even get, you have to get to page 4 to be able to get to your code, to get to your tax payments. So this is a very new concept for pass-through owners. So we really want to make sure that no one's missing their credit on their tax return. They're getting the deduction for federal purposes. So that's where they're saving their tax. And then they should be getting that credit. And then especially because they've already made estimated tax payments for themselves in 21, most likely, you know, there's going to be a pretty big refund. So we don't want people to miss out on this credit because it's so buried in the pages of New York State. So controllers, CFOs out there, if you're getting these questions from your owners, you'll know exactly where to point them to make sure that they get it right.
Yeah, I think we did mention earlier that the PTET is really a savings of federal tax, but for New York purposes, everyone already paid in their estimates for their pass-through income, and now there was already paid on the PTET as well. So when the individual is filing their return, we want to make sure that they're not paying tax on the final return in both places. So then on the individual return, New York State issued a new form this year, IT 653. It allows you to sum up any and all PTET credits that you did receive from flow-throughs. These are all going to be reported here as a credit and then also as an addition to your New York State income. And on the return, the credit is going to come through kind of where all the rest of your credits are already reported. So any withholdings, estimates, extensions are all going to be kind of summarizing down to your total payments on the individual tax return. Any excess credit is going to be treated as an overpayment, which can be refunded or applied to estimated tax the following year.
What does that refund mean to the owner? And so if they get the refund in 22, so if we have a refund of PTET, what are we going to do on their federal return in 22 with it?
So when the owner gets a refund of that, that is going to be taxable income on their individual tax return in 2022. And we are expecting that there's going to be large overpayments this year as a result of PTET. So we will need to take a look to see if it makes sense to apply it forward, or maybe if you do want to have that refunded this year to get your money back. And then when we calculate your estimates for 2022, we'll need to make sure we're taking a look at income excluding any pass-throughs that made a PTE election. So if you do make the election again in 2022, we'll make sure that we exclude that from any estimates this year so that you're not caught in that kind of double estimate place that you were for 2021.
Now, Amanda, earlier you were talking about calculating the PTET, and so New York State makes us calculate this at the entity level based off of the entity's taxable income, and those graduated tax rates are somewhat similar to the individual rates, but when you kind of divvy out the revenue amongst the pass-through entities, pass-through owners, it's quite possible that the individual is going to be in a much lower tax bracket than what the entity was required to pay in, correct?
That is correct. And we are expecting to see that in some cases. If, overall the entity had $5 million of income, they're paying in one of the higher tax brackets, but maybe you as an owner only owned 10% of that, and you're going to be in a significantly lower tax bracket, presumably. So you will have a larger refund coming back than maybe someone who owned the other 90% of that entity. Then getting into our elections and estimates a little bit here as well.
Okay, so again, we're going to keep hammering at you about these elections. So these are annual elections, and when you think about what your 2022 tax year is going to look like, if you are going to have taxable income and this is something that you want to be able to benefit from, you're going to want to make that annual election. If hopefully you have net income, if you're looking at maybe potentially a loss year and you don't want to commit to making this election because it is irrevocable, even if you are in a loss year, you could be, can be on the safe side and file the election, but it is a good discussion to have with your tax professional to make sure that it makes the most sense for your entity and what your expectations will be for your 2022 tax year, especially because it's, it will create a bit of a cash crunch, because if you made the 2021 election, you've got some money tied up in getting those refunds back. And then you've got your first quarter 2022 that'll be due on March 15th as well. But again, it's a few easy clicks to make the election. It is beneficial to be able to do it if you think that you are going to have the taxable income. And let's see. So again, we're going to go back to, this is the responsibility of the taxpayer. So whomever is logging into that New York State business account, you have to make this election on behalf of your entity. The tax professional is not allowed to. The tax professional is making sure that you're getting your money to New York State. We just can't help you make the election. We can help you decide whether it's appropriate for your entity to make that election for 2022 and what the benefits could be to the owners of the entity through the New York State Services account. If you do, and I really, for tracking purposes, if you're making these elections on your own, which is great because it really is just a few clicks away, if you could just send a copy of your election to your tax professional via email, so we have it in our system and that we can make sure that we're tracking it, so that when quarterlies are due, we can reach out if there's calculations that need to be done, so we're all on the same page. Things throughout the year so that everyone's on the same page and we know, hopefully we didn't Hopefully we're still on. Sorry, we just got a message pop up that our internet was unstable. Hopefully we're stable. We're close. We're almost done here. I think it's just tired of talking about PTET. Okay. All right, so that's all I have on elections. I think we have another polling question from Maria coming in here, probably the last one maybe.
Yes, this is our last polling question. So if you do indeed want CPE credit for this session, the 1 hour of CPE credit, you should answer yes to this question, because this is how we determine if we send you a CPE certificate. So please remember to select yes if you do want CPE credit. And I think we did had a little glitch on my end. Amanda and Michi, you froze for about 30 seconds and then you came back. So I think we were still able to hear everything.
Okay, great. I think we covered most of that slide throughout the presentation as well, but if anyone has any questions, please feel free to throw them in the chat or Q&A.
Okay, we will, I'll just give another second for this, and I'm not going to share these results, so I'm going to end the poll and you guys can proceed.
Great. Thanks, Maria. Amanda's going to work through 2022 estimates for us, since this is going to look a little bit more normal than 2021 did.
Right.
You know, somewhat normal, but
Right. And for 2021, in a lot of cases, only cash basis taxpayers were making an estimated payment to make sure that they got that deduction in the 2021 tax year. A lot of our accrual basis taxpayers opted to just wait and see what the final tax was going to be, because they didn't have to make the payment in order to claim the deduction. So now for 2022, New York is saying everyone's making estimates, and they provided this estimate schedule, lines up with the rest of the estimates that you're already paying: March 15th, June 15th, September 15th, and December 15th. If you did file in 2021, we'll provide you with safe harbor estimates, as well as instructions to be able to go online and make those payments yourself. And then as the year goes on and we have a little clearer idea of what your income is going to look like, we can make some adjustments, you know, September, December payments to get you a little closer to actual if you had a significant change in income. If you're filing new for 2022, we will need to look at these quarterly to make sure that we are paying in an appropriate amount for New York State. We are expecting that in 2022, if you are underpaid at any point, that there will be some late payment interest in there. We haven't seen that calculation or schedule from New York yet, but I'm sure it is to come. As with many things with PTET, we're kind of learning as New York releases information to us slowly. So if there is an update on that in the future, you will definitely hear from us in some manner. And then, as we've mentioned, we do have some resources available, and I believe Maria has shared those in the chat and in some of the other correspondence related to this webinar already, but there are links for our election instructions and payment instructions when you are going to handle those items on your own.
Yes, and in the follow-up email that everyone receives, we will certainly share those again. But if you go to our website, lumsdencpa.com, and just search PTET, there's one page with all of the resources. And we do have a video that Michi prepared for us. It's about 3 minutes, and it summarizes a lot of this as well. And of course, the recording will be available within the next 5 days. So all of that will be shared in the next few days. All right, so that looks like a wrap. We'll
Maria,
hold on for.
Maria, can I just, before we get into open Q&A, if anyone has anything, I was just thinking about, you know, some tax planning opportunities for 2022, you know, because this looks like something that's going to be sticking around a while for us. In turn, it doesn't seem like that they're going to increase that SALT cap. And while we are talking about pass-through entities right now, there are, you know, we talked about ineligible entities being sole proprietorships or single member LLCs. There are opportunities there for those taxpayers if you've got those large taxable Schedule Cs or Schedule Es. I encourage you to reach out to your tax professional and let's do some tax planning on whether that makes sense for you to maybe change the classification of your single member LLC to be able to take advantage of this tax benefit. There are a lot of calculations and things to consider when you're changing your type of entity or your classification, and how certain calculations would work in terms of retirement and 189A. So I find it's really important that for those individuals, because this isn't going away, to reach out, have a discussion, and see what makes the most sense. And we want it to be cost beneficial for clients as well, because you will have some legal and additional accounting fees if you were to change your structure. And that's what I have for planning. So please, let's just keep talking about this. We want to make sure that we're saving you as many tax dollars as we can. Sorry, Dan, I know this is a really confusing topic. I know that we went through these, we've gone through a couple iterations together with this, so hopefully it clears it up. If not, you know where to find me.
So thank you to Michie and Amanda for putting all of this work together, and hopefully the resources we have available to everyone will help make this a little less confusing. And of course, like we've said this morning, we are here to help you with it. So again, resources are available on our website. We will have a survey launch automatically once you end. So if you could take a minute to please complete that. It's only 10 questions, and I think 6 of the 10 are multiple choice, and that is a requirement for CPE. So again, please take a minute to complete that for us and reach out if you do have any questions. So thanks, everyone. Have a great day.
Thank you.
Bye. Thank you.
Bye.